we have Laura Cooper, BlackRock Senior Macro Investment Strategist for iShares EMEA. Thank you so much for being here, Laura. Is this good news both for the markets and the Fed this morning?
I think it is probably good news because it essentially just continues this string of strong economic data that we have seen. And certainly markets are reacting in kind to that. Because I think when we look back to what we heard from the FOMC last week, it does suggest that the Fed is willing to live with a higher degree of inflation and yet still follow through on the easing cycle starting probably in the middle of this year. Now, we did, of course, have some comments from Waller that suggest that so long as this data does continue to surprise to the upside, perhaps they're going to delay that a little bit. But I think this is not a material enough change. I would think the inflation print tomorrow is probably going to be more of a signal that leans still towards the Fed, still potentially cutting, if not June, then certainly I would suspect by July.
Laura, if we don't get a rate cut in June, what do you think that immediate reaction could potentially be for equities?
Well, we have seen a little bit of paring back of the odds of that June cut. So we were about 80% before the Waller speech, and then that kind of subsequently fell to about that 60% mark. So there is scope for that to be further priced out. So a bit of a knee-jerk reaction at the front end of the U.S. curve would potentially take out some of the steam from the U.S. equity market. But I think overall, this is still a market that is being driven by relatively strong fundamentals. Central banks are poised to cut rates. Economic activity in the U.S. continues to remain strong, and then overlay that with what's happening in earnings. If we look at earnings expectations across sectors in the U.S., they are all expected to post positive 12-month estimates. So I think it's quite still a favorable backdrop for equities, really in the absence of a clear catalyst. Potentially tomorrow's inflation print could be kind of a knee-jerk reaction if it does surprise strongly to the upside, but I think we would need to see a few of those upside inflation surprises come through for the Fed to materially deviate from its current policy stance.
Well, on that data we're getting tomorrow, Laura, what does the data we've gotten in so far, particularly with CPI and PPI, tell us about what we might be able to expect tomorrow?
Well, I think the data so far does suggest that inflation is coming in a bit hotter, certainly, than the Fed would be comfortable with. But we did have Powell last week suggest that they do expect the inflation print for the PCE to come in, below that 30 basis point mark tomorrow. The market's expecting the core gauge to come in about 0.3%, so below that kind of 0.4% print that we saw yesterday. But we need to see, sequential month-on-month prints show further signs of slowing for the Fed to be comfortable that it's going to have inflation back on that sustainable path to 2%. So it does suggest that even if the Fed does start cutting in July, if it get more comfort on the inflation front, this is going to be a very gradual easing cycle. And I think financial conditions, are still easy. The battle for the Fed will really be trying to maintain this kind of hawkish guidance to try to keep rates restrictive so long as this economic backdrop continues to remain as resilient as it has been.